Welcome back to the show. Let's talk to Simon English. He works for the Evening Standard. Simon, welcome to the show. A couple of headlines from your newspaper this week. Don't be afraid of the interest rate boogeyman, according to Callum Pickering, an economic analyst at Berenberg. In terms of interest rates, obviously we've got Mr. Carney next week. Not dissimilar in terms of a headline, worst slump in house building in London since the 90s crash. So we've got an argument where everything's going really, really well, but we've got this Brexit and certain sectors not working particularly well. Mr. Carney, reputation of a 3.5-hour marathon man, a man who's the unreliable boyfriend. What's he actually going to do next Thursday? What would you do if you were Mr. Carney?
Well, if I was Mr. Carney, I'd have put rates up ages ago.
Right.
And he's deferred and changed his mind for at least a year, possibly two. I think rates have got to go up next week. His own credibility depends on it. He's almost said as directly as anybody could, rates are going up. I think if he flip-flops now, which he has done before, if he flip-flops this time and leaves rates unchanged, it suggests panic and it undermines his credibility. So what we had this week was GDP at 0.4% a quarter, which ain't very good, but it's better than they thought it was going to be. And all these other signs, inflation in particular, telling you rates have got to go up. He's just going to have to ignore the house building in London stuff and do what he said he was going to do.
So the markets are anticipating basically an interest rate rise, okay? Is this effectively the one to put right what many perceived as being a bad one last year on the back of Brexit? Is this the beginning of an upward cycle? As a mortgage holder that you are, okay, are you getting nervous that the rates may... Where are they going to go to? Is this going to be a one-off, do you think, or do you think there's going to be a series next year?
I think there should be a few. I think in terms of mortgage holders, if you're not on a fixed rate, you want to get on one, because mortgage costs are already going up. So the market has moved already in anticipation of next week's move. So your mortgage, if you're taking one out or can switch, it's already more expensive than it was a week ago, because they're assuming that Mark Carney is going to do what he said he was going to do. It's not the reason why he might as well get on with it. What Lloyds Bank said this week in terms of interest rates, which are now 0.25, they think interest rates will be 1% in 2019. That's still, remember, incredibly low. So it's not bad, but the direction of travel seems to be as clear.
Understood, Simon. Thank you very much.